To begin the session, I'd invite our chairperson, Mrs. Christine E. Rai, to welcome everybody and share a few words with us. Christine?
Thank you, Anchal. Good afternoon, everybody. Can you hear me all right? I've been having some sound and internet issues. I think all our geos are getting to the end of their life with so much heavy usage and webinars. Anyway, a very warm welcome to everybody. I'm delighted to see we already got over 100 people on and expecting quite a few more people to join. I think we're also reaching a stage where we'll have to start having webinars late at night because there's no more time slots left between all our EPCs, all our associations, FICCI, FIO, PhD, CCI, government, not to mention all the fun stuff, the Jaipur Literature Festival, and all the music and art that's happening. I think we're all really becoming very, very used to being on webinars. Anshul, can I have everybody's mics muted? There's a lot of background noise. We can just mute if anybody who's not speaking. As you know, is a young and fairly new association. We were formed 4 years ago. Our aim is to really work on uniting all the buying agents, getting to know each other, and also to really cement our ties with the vendor exporter fraternity, get to know each other better, which I think we've been able to do quite well over the last 5 weeks of being in lockdown. We aim to continue it. We will continue to do regular calls, focusing on what the issues are. Also, one of our big focuses is knowledge and information sharing. And I think this webinar is a good example. The concept of factoring is understood by many people, and I know we have many people in the audience today who are financial geniuses. But the facilitating of factoring in India has not been that common, and I'm not sure how well understood it is. So we brought together today a very interesting assortment of factoring companies. Most of these companies are fairly new in the Indian market. They are permitted by the RBI, and they provide an alternative collateral-free financing, which I think is of considerable interest, because we know on our client side, many of the bigger brands are asking for longer extended payment terms. I think it's very hard in the Indian context. Our banks are not necessarily so modern or so flexible in their terms. So I think that we welcome a very lively exchange. Today we will be asking the panelists to each speak. They've all been given a slightly different topic, so we won't be having any overlaps. When they finish speaking, then Anshul will be taking questions from the audience. We are asking you to please all keep your mics on mute throughout. Please do not be shouting out questions. This is a webinar. We're still figuring out a few technical things, how to keep everybody on mute. But you're not to speak. If the moderator would like anybody to speak, she will ask you to speak. Otherwise, she will be asking the questions. The idea is it's much more efficient on time, and we can hear more questions and get more input. So welcome to this series in many series of knowledge sharing from the Buying Agents Association, and looking forward to a very interesting afternoon. Thank you all so much for being here. I see we're now up to 115, so people are eating their lunch quickly and joining us. So welcome everybody.
Thank you, Christine. Thanks a ton for the lovely introduction. So before we go on to introduce all the panelists who are on board today with us, I'd like to basically take you through a brief thought process why we all got this factoring seminar together. So we had tied up some time back with Drip Captal to host a series of educative seminars pan-India to make people aware of the needs of factoring. At that point in time, our emphasis was more on the working capital requirements of the industry to say, let us give easier payment terms to our customers, let our vendors be more secured, and most importantly, let us allow our suppliers to have easy flow of working capital, which in today's date is a need of each and every business. Now we have hit the COVID times. So apart from everything else, the most important question that has come into the industry is about the security of payments of our suppliers today. So for a very long time, we've been having a lot of discussions in the past 30 odd days that we've been under lockdown. We've spoken to multiple associations pan-India, to all the councils which are promoting exports. One common question that every discussion has had for us is, what can we do to make sure that our buyers are going to pay us, or what can we do to secure the payments of the vendors? So the very first answer that comes to any of our minds, at least, having had the knowledge of factoring so far, was that we must introduce more and more of factoring services to not only allow for cash liquidity, which is going to be a crunch in today's date, but also allow our vendors to be safeguarded to a great extent. So with this in mind, we thought it's a great idea to have 5 to 6 panelists who can share different perspectives of factoring and what they are doing in the industry to help us with this crisis situation that India and the entire world is facing. To take things forward, I'd like to introduce all the panelists who are on board with us today. We have Anchal Kansal from Drip Captal. He is the Director of Business Development of the Indian subcontinent. Ankur has been leading the business vertical for Drip Captal and has been a part of Drip's journey ever since its inception early on. He's been working on capital accessibility for SMEs of the Indian textile sector and has been very, very active in trying to make dents and probe greater market share into the other sectors of the Indian economy. He takes keen interest in the global trade ecosystem. He's an IATN and an ISB alumni. Welcome, Ankit. Welcome on board. Then we have Puneet Singh Bhutani. Puneet comes from India Factoring and he is Executive Vice President and Regional Business Head for North India. Puneet has close to 20 years of experience in factoring, trade finance, working capital lending, corporate finance, and structured trade products. He's been associated in his past with Yes Bank, HDFC Bank, and Axis Bank, and has been now with India Factoring for many years. Puneet is an information technology postgraduate, and he holds multiple certifications in international factoring. Welcome, Puneet. Then from Kredex, we have Prasanna Madhyastha. Prasanna is the head and partnership of partnership and strategic alliances. He's been in senior leadership roles in commercial banking, cash management, retail banking, including experience in front and back end office operations. He's got great exposure to business financial supply chain financing. He has a combination of banking management and strategic execution with hands-on supporting through a variety of functions, including coordination and support for certain banking operations, key initiatives, projects, operations, and client services metrics, reporting and distribution. Welcome, Prasanna. We then have Vayana Network, and we have Dhruvan Doshi representing Vayana Network as AVP International Trade and Supply Chain Finance. Dhruvan has about 4 years of experience, and he started his career as an investment banker and eventually moved into the startup fintech space. He has assisted many MSMEs and SMEs in getting export finance from various factors, including Drip, also who is a part of our panel today, and Vayana. He has been instrumental in cross-border sales at Vayana Network, having worked with SMEs and MSMEs very closely. He is an MBA from Mumbai University and drives cross-border business at Vayana. From the factoring side, the last representative we have is from Seawise Capital, the Chief Operating Officer, Mr. Vidur Jain. Vidur is a co-founder and CEO of Seawise Capital. He comes from a finance background, having worked across lending, investment banking, and fintech in different regions of the world. To bring into the perspective of the export community, we also have Mr. OP Prahladka with us today. Mr. Prahladka is the founder of Hitaishi KK and Lion Group. He is the ex-chairman of EPCH. He is chairman, Handicrafts and Carpet Sector Skill Council. He also is the founder of the Association of Jute and Handicrafts Entrepreneurs of Eastern India and Jute Product Development and Export Promotion Council. He's also a promotee director of IMEL. I welcome Mr. Prahladka on this platform today. Welcome all the panelists. I do hope we are going to have a great session today. To begin the session, I would invite Ankur Khetan to help share some inputs on exactly what factoring is, how it works, what is factoring in terms of exports, and share with us some simple framework so that people who are not aware of factoring are able to understand this facility a little more. Before Ankur takes this on, can I request all members on the call today to please switch off their cameras except for the panelists? Requesting all members on the call today to please switch off their cameras except for the panelist. Thank you. Ankur, would you come and share your views on factoring with us, please?
Thanks a lot, Anchal. I would also like to thank Christine and Mr. Manoj for organizing this session. I think like it's the third session we are doing with BAA, and some of you might have attended the session we did in Moradabad and one, in South India. So it's really great to be on the panel, and I think the timing is also right because in this business environment, the SMEs are the ones which need enough cash flow and liquidity to sustain the crisis. And if you look at all the predictions around, how the business sentiment is going to be, at least on the financing side, people are looking at 12 to 18-month period where things are going to be slower than normal. So this is obviously a challenge, but there's also a great opportunity which presents India specifically, right? There is going to be a lot of shift in global trade patterns. Specifically, a lot of trade is going to move from China to other Asian counterparts. And this is the opportunity for India to make its mark on the world map, right? So I think it's a great initiative, and this is something which we need at the moment. Apart from government support in terms of like subvention and making land and capital accessible to all the exporters in the country, I think we as financiers, like Anchal mentioned, like most of the players who are active in this market are present on this platform, would be able to add a lot of value to your business. So just like to make things simpler, I'll just share some slides for those of you who are new to factoring, or you still haven't heard about this product or are not sure how it really works. I want to share a couple of slides so that it makes it easy to absorb. Achal, is it possible for me to share slide? You're on mute, Achal.
Ankit, can we give access to Ankur to share the slides, please?
It's done. It's done. He has the access.
Thank you.
Perfect. Thank you very much. Cool. So factoring is a simple finance product, right? To explain to you, a lot of factoring companies offer financing at different stages, but the simple logic is that you submit a set of invoices, which can be invoices, let's say you're supplying domestically or you are exporting out of the country, right, to your factoring company. Let's say the value of invoices is $100 or $100,000, right? The factor will advance you up to 80 to 90% of the advance of the invoice amount on day zero, right, post submitting the invoices. And let's say your credit period is around 60 to 90 days. On the 60th or 90th day, the receiver of the goods, right, or the payee will pay to the factor company. It can be any factor company, let's say Drip Captal, Seawise Capital, or Vayana Network, and then you get the payment, whatever 20% or 10% is left, the factor remits to you on the final date, right? So typically, if you look at the solution, right, this is the dynamics. Like typically you have to just submit an invoice. It's a collateral free product, right? Where you're just submitting an invoice and you're getting the payments. Okay. Now, the beauty of this product is onboarding is very, very fast and you can receive funds within 24 hours of shipment. And most of the players which exist in the market today bring to you a digital interface. So you don't have to visit your bank or you don't have to, call up your relationship manager. It's a portal or a web interface where you can upload invoices and immediately get funds, right? At a very reasonable pricing of 0.7 to 0.9% per month. And this is the market range, right? Now, what is the benefit of this product? So I would say the things in blue are the benefits which you are going to get. And the thing is green is more how is it different from your other product or what is the extra sort of layer which you won't be having in let's say a OD product or a CC product, right? So it's a collateral free and an off balance sheet product. So off balance sheet product means it doesn't reflect as a loan when your bankers assess your balance sheets end of year or when they do their reviews, right? It will typically reflect on the asset side. There is full credit protection on willful default or buyer bankruptcy. So we are seeing a lot of cases, right, where people have accepted the goods, especially in Middle East and Asian countries like Thailand, Malaysia, right? And there is a delay in payment, right? So, but you have supplied the goods on time and you are not planned for that sort of cash protection, right? So factoring companies typically will cover any buyer default which is willful, given that you have delivered on the quality of goods, etc., or there's bankruptcy. Another beauty of this product is that there is no FX risk. So you get the money in the currency of your invoice. So either you are invoicing in euro, dollars, Australian dollars, Canadian dollars, or even INR, right? There is no FX risk. Your money comes basically in the same currency. Your buyer will pay you the money and on day zero. So you don't have to worry about currency fluctuations during your credit period. So these are very, very solid benefits. And a lot of people, like I think Hitaishi is also our client and they have been using this facility. So these are very, very small things which add up to a lot of costs. And it gives a lot of comfort to the suppliers who are, trying to figure out their finances and so that you can get back to doing your business, right? I think one major change which is there in this product compared to a CC limit or a OD limit, right, is obviously it's collateral free. The payments are basically routed through a factor's bank account. So let's say if you're factoring through a Drip Capital or let's say any of the other players, right, the money which your buyer pays, your US buyer or European buyer will pay into the factor's account. So this is one change which typically people are also sort of worried about. They want to understand like how does this ensure their cash flow, etc. But I want to highlight that in terms of liabilities, like the factor is not sort of factor cannot hold back your payment. So typically it's just a pass-through arrangement where the money. Or no? Sorry. Okay. So it's just a pass-through arrangement and you need not worry about it, right? So I think this is more about factoring, and I'm happy to take questions if there are any at the end of the discussion, right? Also, I was just going through the BAA website, and I think most of the sectors which we are dealing with, right, is related to textiles, handicraft, footwear, leather goods, and there are obviously like other players who deal in gems and jewelry, right? So I think like overall, factoring is a product which has been used by these sectors extensively in other parts of the world. So if you even talk about like Europe, so 10% of their GDP is invoices are, that is the value of invoices which are getting factored, right? And in India, it's somewhere around 0.3% or 0.5%. So it's not a new product per se in the financial space, but it is something which was not available in India. Probably our banking system is still evolving. So it's a very, very mature product and very beneficial product. And if you see, like most of the sectors have more or less adopted this product. So that is on the positive side. And I think hopefully with this kind of cash flow, right, we will be able to bounce back our economy as fast as possible. I see, I was speaking to some of our clients over last 3-4 days, and they are very, very positive. A lot of them are getting orders. especially like in agri and the sectors we mentioned. And we are sort of ready to support those companies. And I think all the factoring companies on this panel, right, are ready to support all those companies and, kick back the business. So that's all from my side, Anchal. I think if there's any other point you want me to cover.
So this is great. Thank you so much, Ankur. I'm sure there'll be a lot of questions that will come from our members here today, but we'll move on to our next panelist and take his views on a few more questions. Puneet, if you could just share with us, obviously factoring is a relatively new concept as compared to this concept existing in the US market or other markets. So India people are still not as aware of factoring, and I'm sure there are various operational reasons or operational problems because of which factoring has not been so upcoming as a service in India. So if you could share a little bit about what exactly are those operational problems in factorings while dealing in India, and are companies involving more of technology and advancing in different directions to get factoring up and running in India? If you could share your views on this, please.
Sure. Good afternoon, everybody. This is Puneet. So I'd like to touch upon the operational and technological aspect of factoring, but I'll start with a brief how we do it at India. So India, can you hear me?
Puneet, your voice is breaking up in between. It's okay now.
Okay.
Yeah.
So India Factoring is a RBI registered NBFC. It's a specific category of factoring. So we do factoring. We also authorized RBI.
Puneet, we're not able to hear you. Puneet, are you still on?
Yeah, can you hear me?
Yes, now it's coming absolutely clear. I hope it stays like this. This is perfect.
Yeah, it says host has stopped your video. So is that okay?
Possibly, because it always helps to switch off the video and
Okay.
then the voice
So you're able
comes.
to hear me now?
Yes, please. Yes, please go ahead.
So India Factoring is a NBFC registered with RBI as a specific category of factoring. So we do domestic as well as export factoring. Also, so we being an authorized dealer with RBI, there is no bank involvement. So as any exporter handles the export document with any bank, it's the same with us. Once the shipment has happened, the documents are submitted to a handle the document in the same way the bank handles. So we only.
Puneet, I'm sorry to interrupt you. Your voice is breaking up a lot in between. I don't think the audience is able to hear your full sentences.
So you want me to connect again? I'll connect again.
Maybe that'll be easier if you could connect.
So maybe you can take the next panelist first. I'll connect.
Yes, thank you, Puneet. Thank you.
Yeah, that's okay.
While Puneet is connecting back again, I'd like to invite Prasanna from Kredex to share with us a little bit about domestic factoring and how can this help exporting companies? How does the entire concept of domestic factoring work? Prasanna?
Yeah, so good afternoon. I had sent a presentation. Will it be possible for your technical team to upload it?
Yes, please. Ankit, would you please share the screen with Prasanna's presentation?
Just a moment.
Till the time presentation gets uploaded, maybe I would like to start a basic. Domestic invoice discounting. So what we are trying to say here is that most of your viewers or members who have registered here, of course, along with discounting international or liquidity need against invoices which gets raised for export shipments. I guess there will also be a lot of domestic supplies these guys will be doing. That's where what we are expertised in the last 4 years when we formed this company. Yeah, great. So here we are. So I would like to touch base a little bit on domestic invoicing from a
वो तो
history
फोटो आ जाती है, फोटो शेयर हो जाती है.
Ankit, could you please mute Mr. Alok Mehta? Thank you. Prasanna,
Muted.
please go ahead. I believe you've muted Prasanna also. Prasanna, 1 second, you'd be needed.
Yeah, is it clear now?
Yes, it is clear.
Great. So what I was trying to say is that I'll just take 10 to 15 seconds to give a history about how it is shaped up in India on discounting. Historically, before banking started, people used to talk about hundi discounting, and which is traditionally also going out in the market other than banks discounting invoices. Fortunately or unfortunately, the way banks picked it up from a hundi discounting to a bill of exchange discounting, most of this were considered part of working capital limits, and due to which these were forced to hypothecate stock and book debts and collateralize these limits. And that's how banking has evolved over a period of time. We felt that what we are trying to do here in invoice discounting is that we are giving liquidity against goods or services.
Prasanna, can I interrupt you, please? We have a lot of members saying that the voice is not coming clear. There seems to be some static coming in your voice as well.
Okay, so what do we do? Is it clear now?
No, it's not. Are you connected to a hotspot or a Wi-Fi that could?
I am connected to a dongle, yeah.
Okay.
Geo dongle.
Because there
We'll
is
have to stop his video, ma'am. We'll have to stop his video.
Okay, that's fine. I mean, if that can help, that'll be okay.
We can stop the video, maybe.
I think we need to stop his video.
Yeah. Prasanna, speak
I am
something.
fine with that.
Oh, this is perfect. Thank you.
I'm fine with that. I can manage without the video.
Yeah. This is sounding good now. Thank you.
So what I'm trying to say is that, with banks looking at invoice discounting as a part of working capital limit and considering this in the MPVF and in the traditional way of underwriting a seller or a supplier, what we felt is that that should not be the right way. Because these cash flows are coming in from large corporates who are the buyers here of goods or services, and cash flow should be the main criteria for somebody to underwrite under invoice discounting model. So that is where in Kredex what we have done is that we have done two things. One is that we have structured this completely on a cash flow based underwriting model where we use technology to underwrite, and we have an in-house risk engine which will massage the data and the documents submitted by the suppliers digitally, and we set up a invoice discounting limit against approved customers of the buyer of the sellers. So in a way, this comes completely unsecured and off balance sheet. This is what we would like to say, because this also the entire structure is more on a factoring model where the seller who has the right on the receivables which he is expected to receive in the future date, he is actually selling the right of the receivables to an interested financier on a platform. So in a way, another thing which we have tried to solve the problem is the liquidity problem. Historically, if you see in India, banks and NBFCs have gone through pressure of liquidity, either because of crises which has happened internationally and domestically, or because of the liquidity concerns where we have seen off late banks are stopped funding NBFCs. RBI is bringing in certain measures to bring in more liquidity. So in this is where we felt that this is not the right way for us to go through and solve the liquidity problem for emerging corporates and SMEs. That is where we built a platform where we have allowed financiers to onboard themselves and participate in buying the receivables. So in a way, bringing in multiple financiers on the platform who are typically high net worth individuals, family offices, mutual fund companies, and EPF companies who have surplus funds, who understand the risk, who trust the data published by the Kredex platform and bring in liquidity and hence fulfill the need of the liquidity against the invoices uploaded on the platform. So these are the two reasons we feel that this is the way forward for for something like domestic factoring or domestic invoice discounting to be managed, and this is what I had to say. Now, how it is different from the current system, I would say that this is completely off balance sheet, because here there is no loan which is being provided. It is actually liquidity being provided against the right on the receivables. So it actually hits into the P&L of the balance sheet, and it doesn't touch the balance sheet from a loan point of view. So this is one bigger benefit for all the suppliers and sellers domestically. Second thing is it's completely convenient, because it's 95 to 98% technology automated. So it's quicker. It doesn't take 2 to 3 months to evaluate a case. It just takes 48 hours for a seller to get a sanction once the documents are submitted, and then the next hour he is good to go to start using our services. And I need to talk about current crisis and how we are adding value during this crisis. As entire country is looking at and bifurcating the entire services and trade to essential and non-essential, being a platform fulfilling the liquidity need of sellers and suppliers, we are still funding all the essential service sectors and sellers during this crisis period too, like your pharma, logistics, FMCG, which has been designed and structured by Government of India. We have also started funding in this current crisis companies who are supplying on a PO basis PPEs and all the COVID crisis related products to state governments and private entities, where this is masks or PPEs or ventilators. There are a lot of inquiries which is coming into us during this crisis. So in the crisis also we are funding this, because these are the need of the hour and we are trying to support the crisis. So these are few ways we are trying to work on. Currently we are a 4-year company, and we do have onboarded 62 corporates in India whose vendors are on our platform and enjoying our services. Typically what it's going to do is that it is shrinking the credit period from a 30, 60, 90 days, thus making liquidity very near to you, and you can churn that liquidity to take bigger orders and more orders from your customers. Yeah, this is what I had to say.
Thank you so much, Prasanna. Indeed, interesting to know about domestic discounting of invoices. We'll move on to Puneet. Puneet, if your connection is okay, then can we take you on as the next panelist to discuss about...
Yeah, Anchal, can you hear me now?
Yes,
Am I audible?
I can hear you very well, yes.
So you want me to start from the beginning? Was I audible or no? It was not audible.
No, I think you should start from the beginning. People were not able to really hear you well.
Sure.
Thank you.
So good afternoon, everybody. What I'll do is I'll start with the technological operational aspect of factoring. I'll start with a brief introduction of India factoring, how we do it in India. So India factoring is a NBFC registered with Reserve Bank of India. That's a specific category factors. So we do only domestic as well as export factoring. Along with being an NBFC, we are also authorized dealer with RBI. So this is in terms of operational aspect. So as any exporter is dealing with any of their bank for any of their post-shipment lines, they need not change anything while they are going with a factoring company. We follow the same rules and regulation as any other bank would follow. For post-shipment, you need to upload those documents in the portal. We'll handle the document in the same manner. We'll do the EDPMS closures. We'll issue the BRCs. So that operational aspect is similar, exactly similar. There are no changes. So this should not be complicated. It is as simple as you have been doing with ages with any private sector or any other bank. It is exactly similar. So in terms of funding, we fund as large as 95% of the total invoice. We are a member of FCI, which is a governing body of factoring companies across the globe. So we have tie-up with around 400 import factors, we call them, in over 90 countries. In India, we are present now for over 10 years. And in export factoring, we are doing business from now more than 3 years. Specifically, if we talk about textile and apparel, if you say about top 10 players in the country, we are already serving top 5. So I think we have reasonable knowledge in textile and apparel. As far as technology, we work with top in the line systems. So there are no hassles. The documents have to be uploaded in the portal and you get the 4 hours. We fund in both foreign currency and as well as INR. So rates are linked to LIBOR. We fund in all the major currencies. And to talk about benefits, this factoring facility is, like Ankur said, it's without collateral. It is off balance sheet because we actually, when you the document is purchased by us, so we become the owner of the documents once you submit us the document. So it's an off balance sheet solution. Doesn't come to debt part of your balance sheet, so it helps your ratios. Your balance sheet becomes less leveraged. We give credit protection, and credit protection is to the tune of 100%. So there are few factoring companies would give you credit protection for a 90%, but here in India factoring we would 100% and we fund as high as 95%.
Can I just interrupt here and request you to take us for one specific discussion that we wanted to have from you, which was more pertaining to what are the operational problems that factoring is facing in India? You as a company, as India Factoring, or maybe other companies that have joined in so far in this line, are there really any operational challenges that you guys face while dealing with factoring in India?
See, there are no operational challenges as such. Now there is a Factoring Regulation Acts which is already done in 2014. So there are no operational challenges. Our processes may vary from a company to company. Say, for example, in our case, once the facilities are sanctioned, you just need to inform the buyer over an email that the seller has entered into an agreement with the buyer, and all the proceeds going forward has to go to India Factoring. This has to be done over email, and acknowledgement has to come. So there are no challenges. However, there are other companies who may insist on a tri-party agreement. So you can tell that can be a challenge, getting a tri-party agreement between a buyer and a seller and the factoring company. However, there is no such agreement as far as India Factoring is concerned. So I think this is one of the most vanilla product which is available in working capital. So I don't find any challenges. This is one of the most easiest product to get for working capital for any SMEs.
So in that case, why is factoring still not as famous as we would like it to be in India? I mean, if there is really no challenge, then that should probably come up as the first, as you said, it should be a vanilla product and should be the first point of working capital requirement to any exporter or any other person who's requiring such assistance. So what is the hitch? What is the hitch?
It's a very valid question, Anchal, because if you see globally, factoring is the #1 product which any would take, and then they go towards a CC or a term loan. However, in India, the awareness levels are very less. So there has been a focus from RBI to focus on supply chain, on factoring companies. But yeah, the awareness level at the local SME, MSME level is pretty low. I think that is the only challenge. People don't know about factoring.
It's more about awareness, which is what we are doing today. So that is a great thing to know that.
Because there are ample, there are ample limits available across good buyers. So there are no challenges, especially in US and Europe. We tend to hear about limits in maybe a week or week's time. So there are no challenges as such.
Great. Thank you so much, Praneeth. That was indeed very helpful for us to understand a little more about factoring. I would now invite Dhruvan Doshi from Vayana. Dhruvan, it's always been a point of discussion amongst most of the people. Even when we talk about factoring, one of the discussions that has always come up is to understand exactly how does a factoring company approves a customer or an importer that they're okay to factor them. What exactly are the parameters that go into approving a buyer, our buyers, to be somebody you would like to offer factoring services for? What is exactly the legal framework under which the factoring operations work? And what are the important steps while taking factoring for an exporter? If you could just help us answer these 3 important questions, it'll be really great.
Yeah, so particularly made slides for all the three topics which you mentioned right now, and would like to share my screen as well. So I'll just, if you allow me to do that.
I'm sure. Ankit, please allow Dhruvan the access. Thank you.
Yeah, so can everybody see the screen right now?
Yes, Dhruvan, it'll be great if you could just put it in full screen mode. That'll help them see it more. Yeah, thank you.
Yeah. So particularly, I would start with, first of all, good afternoon, everyone. I would like to thank Buying Agents Association, Christine and Manoj. I mean, they have been very, nice, and I remember, and on my drip days, that we have entered into partnership with Buying Agents Association at that point of time, and this partnership has been going on. So really happy for that. Apart from that, thanks for giving us the opportunity to at least share some of our experiences with the exporters. The things which I would like to speak about today, Anchal, would be the regulatory framework for factoring of exports of goods and services, which is, I guess, there are a lot of legalities, and there are 3-4 regulations which are quite huge. And right now, remaining the session or the time frame which we have, I guess we need to moreover cover it on a FAQ basis, or the important points which are there for exporters to know, that how does factoring come into place and where it is covered, and which are the institutions which govern the factoring space. Correct. Apart from that, I also want to make exporters understand how factoring companies, obviously different factoring companies or lenders have different approaches to reject or accept a particular customer or the buyer. Correct. But then still, I would like to note out some important points where factoring companies do look at, and this is something which will be very helpful for the exporters here in the panel as well. Right. Third is, I would like to also make exporters understand what they need to do while availing a factoring service. Right. What are the important points for them to know which factor is useful for them or which factor is not. Correct. So these three topics is something which I'm going to cover now. To start with, I would like to note down the regulations which are actually imply factoring services. Now, Factoring Regulations Act, this act is noted down and notified by the government or the Ministry of Corporate Affairs, where all the definitions of receivables, debtors, purchasers, factoring companies are covered in this regulation. And apart from that, it also notes down who can start or commence the factoring business, who cannot commence the factoring business, and what are the definitions of various terms, insurance, banks, what banks can cover, what NBFCs can cover. So particularly this act covers a lot of things for that, and it's a huge act. I mean, more over 100 pages or maybe 80 pages. So yeah, I mean that's the case. Apart from that, the one other act which is governed by RBI is known as Foreign Exchange Management Act, Exports of Goods and Services. Now, this also covers, a factoring principle, wherein the RBI also levies certain terms and conditions for factoring companies as well as the exporters to avail what amount of factoring they can avail. What are the terms which they can negotiate, and what are the terms which are compulsion for an exporter and the factor to comply with, right? All these factors are mentioned in Foreign Exchange Management Act of Goods and Services. And lastly, it is, Foreign Exchange Management Act came out in 1999, I guess, and there have been a lot of amendments afterwards till 2020. Obviously, we can't cover all of them in this session, but at least, to give the general idea to the exporters that this act covers a lot of things where, your foreign exchange is concerned, and RBI would surely, like to govern the factoring practices by this act. Thirdly, RBI also, lists out some master circulars for by time to time for exporters, and which is one of the most important circulars for the factoring companies here, at least for Drip Capital or Seawise, is the rupee foreign currency export credit and customer service to exporters. This circular particularly allows an exporter to avail factoring services from a foreign factor rather than an Indian bank or an NBFC, it allows the exporter to avail services from a foreign factor, and which particularly notes down how Drip Capital or Seawise or maybe other factoring companies which are there do their business in India. And if this act wouldn't have been there, I don't think exporters would have been able to avail services from foreign factors. Correct. So this act particularly covers some important points where, pre-shipment or post-shipment services which are, given by factoring companies, in what scenarios and with recourse, without recourse, a lot of detailed points of factoring are covered in this particular circular. Yeah. So just to note down the key important points and the regulations for the for exporters which are to be known. So any factoring any person cannot start a factoring business in India. Either it has to be a bank or an NBFC which has to be which has to take a certificate from RBI known as NBFC factors. I guess Mr. Puneet would know this very well because India Factoring is an NBFC factors. So Mr. Puneet would know it very well that no company can commence a factoring business in India until unless it is not a bank or an NBFC factor. It has to come. The idea behind this is that it has to come under the purview of RBI. If it is not under the purview of RBI, there is no governing entity. So it has to come under the purview of RBI. Now, exporter can also avail. So a lot of exporters right now, even in this group, would have been availing services of pre-shipment or a working capital facility in all, right? From their banks or their regional banks or the scheduled commercial banks. So the pre-shipment and post-shipment right now are not getting covered under the separate domain, but they are covered under the some kind of collateral which the exporter gives it to the bank, and after which the bank extends the working capital facility, which also covers CC, overdraft, bill discounting, and all those services. So factoring is almost gets covered there. But when it comes to your non-collateral based factoring, which is done by the foreign factors, I feel there is a difference in both of the facilities, and obviously you will also notice the pricing difference and the operational difference as well going forward. The factoring term or the definition both covers both recourse and non-recourse factoring. So a lot of people would have questions that what is recourse and non-recourse factoring. Well, I would cover it when the buyer approval comes in, but a lot of companies right now use this separately, and they have their own terms and conditions of calling it a recourse or a non-recourse kind of a factoring. A lot of also exporters ask this question that will my bank allow if I take factoring from a foreign factor, or will my bank permit me to so I would like to tell all the exporters here that no bank can stop you, or no NBFC can stop you from availing factoring services from a foreign factor, apart from certain special conditions that you have been double financing an invoice, right? You're giving it to a bank for financing, and you're giving it to a factor for financing as well, right? So in those scenarios or the special conditions, banks can disallow you to do business with the factoring agency. But apart from that, no bank can stop you, even if you have a normal working capital facility. But your working capital bank and your AD1 bank, no one can stop you from availing a factoring services from a foreign factor. So there's no need to fear or fear about the arm twisting of banks. So rediscounting, as I said, rediscounting of invoices or double financing is not permitted even by RBI, and that is actually a fraud. I've seen some of the cases in the export industry where there have been they have been double financing the invoices. Please don't do that. You can end up in big trouble. So always remember that if you have taken a pre-shipment or some kind of facility where you have earmarked your documents and invoices to a particular financier, never to give it to another factoring company because you want financing from both the ends. So these are certain key points which I wanted to cover in terms of the regulations which are there. I would right now like to cover buyer approvals as well. So as you can see on my screen, the points which are shared, these are the particular points which a factoring company goes through while approving a buyer or rejecting a buyer. Now, these are very common points. There can be special scenarios as well. But these are very general points which I have noted down for an exporter to know. So credit insurance, a lot of these factoring companies, while approving the buyers, they have a contract with the global insurance companies. So when they have a contract with global insurance companies, what they do is that they take limits or particular amount of protection or an insurance on that particular customer of the exporter, so that whenever an exporter goes into a buyer goes into a bankruptcy or does a protracted default, right? They can go back to the insurance company. A factor can go back to the insurance company, take almost 90% of the amount or 90% of the value of the amount back from the insurance company, so that that amount gets insured. Now, if the insurance company denies giving any kinds of limits on that particular buyer, most of the factoring companies will reject that particular buyer, because insurance company, when they give the limits, they check the financials and underwrite the buyer as a whole, and what all other things they see is also of the viewpoint. Like right now, if there's a COVID scenario, all the luxury retailers, very bad phase going on. So right now, credit insurance company would not give any limits on these particular buyers for the time being. As soon as the business improves, they might start giving you the limits, and they would also take time. So a lot of these buyers will get rejected, right? Because there will be no insurance limits. Secondly, a factoring company also sees DNB reports or the Kredex scores. Now, what is a Kredex scores? Kredex is a tool where it gives you a score for the receivable or the payable aging, right? So how soon does a buyer pay to the exporter, how regular he is, how many delays does he make, right? All these factors come into the place when the Kredex score is defined. So if the Kredex score is above 75 out of 100, it's a good buyer. If it's a below 75 out of 100, it's not a good buyer, to be very frank. So a lot of companies like other factors which are in India, they do a two-factor model wherein they communicate with one factor and communicate with another factor overseas of the buyer, right? And then they try to establish that is that buyer is good, or is that factor ready to give me any kind of a limit, and so that I can discount the invoices of the exporter. So banker communication, or the banks, how they particularly take the factoring transaction actually comes into place where they take a two-factor model, where a stand chart or a DNB might be communicating to each other for a particular buyer, that how much limits are available there. Then factoring companies also do ledger analysis, wherein they take the ledger from the exporter of that particular buyer. They see the amounts of goods dispatched and at what time the payments are getting received. So if the invoice is of 90 days and the payment is getting received on 94th or 95th day, you get the scenario wherein you know the aging of the receivables, right? So that they know that how regular the buyer is getting the payment. Apart from that, a lot of companies will also ask for financials of the buyers, which is difficult to get, but companies do ask for financials of the buyers. So there are very less companies which ask financials, because all of them depend more on the credit insurance, but that is also a criteria. Then next is the AML check. Now this is very important check which the factoring company goes through. It's an anti-money laundering check, wherein they want to see whether the buyer is not involved in any fraudulent activities, or else their money would get stuck. So they would need to check all those things as well, correct? And there are certain institutions which provide the AML data, and the factoring companies buy them for their own purposes. And lastly, there are any legal cases there on the buyers. If there are any legal cases which the factor feels that it can hound them, then they will reject the buyer as well. So these are the factors where these are the points where factors approve or disapprove the buyer generally, and all the factors have this criterion. Yeah. And the next point, yeah.
Driven, I would just request you to expedite a little bit, because we have two more panelists, and definitely we would like some questions to be asked to all our panelists, because there are a lot of members who are asking us a lot of things. Yeah.
Just 4 points, and I'll just finish it.
Absolutely, absolutely. Please.
Yeah. So particularly, I want exporters, to research about the factoring company. So what I want is that you should, research about the factoring company, where they are getting capital from, who are their investors, right? And what all is happening in the factoring company. You can just Google it and find it out. You might, have some articles, you can read them. You should know the cost of the factor. The reason being, a lot of companies or exporters are actually not exactly knowing the cost which is getting deducted after financing the invoice. Now a lot of companies have different approaches or marketing techniques to convince the exporters that this is the cost, but when the final value gets deducted, they actually know the cost. So like everyone say, if they don't understand the cost, they can just contact me after the session and I will explain them how to calculate the cost, what will be the exact amount to know that. Lastly, I would like to, make exporters understand that you should read the agreements of the factors very carefully, because, by missing any of the points, you might be, incurring a huge loss with yourself. So process and agreements are very important for any exporter to, know each and every terms and conditions of the factor and then only sign the agreement. Not reading the agreement, you are making a big loss to yourself. So that is something which I wanted to cover from my side. Anchal.
Thank you so much, Dhruvan. You've indeed answered some very, very important questions, and questions that used to personally plague me in terms of costings and in terms of what goes behind approving a buyer. So it's really great to hear your views on this. I would now invite our guest, Vidur Jain. Vidur, if you could just help us, considering our current situation that we are all in, our COVID scenario, what is the importance that you feel factoring has today, and how can the exporters in today's date and age utilize this service to the ultimate potential to safeguard themselves in this post-COVID scenario or post-lockdown scenario?
Yeah, great, perfect. Can you guys hear me?
Yes, Vidur, yes. Ankit, can you... Dhruvan, can we request you to unshare your screen, please?
I'm having some problems. Just wait a second.
Not a problem.
Shall I start in the meanwhile, or?
Yes, please. Please go ahead.
Okay, yeah. So COVID-19 has been an unprecedented event for the world. It has disrupted the supply chain and supply chain related services such as trade finance in an unpredictable manner. This was truly a black swan event. I think most analysts, no one predicted the reach and the impact it would have. And it has put a lot of strain on export houses in India, especially those supplying to the retail sector in non-essential services. Now, we are coming to the brighter side, where a lot of the countries are saying that they've moved past the peak and reporting less cases, especially in the import countries that tend to import from India, China, etc. So analysts predict that the global supply chain will be one of the first things that recovers, as people will still need the goods and the goods will have to be delivered to them. Another thing that will come out of this is that supply chains will become more resilient. Companies will put in processes and checks to mitigate risks and make everything more efficient. So along with the supply chain, trade finance will also be one of the first areas to recover, especially as compared to other lending areas. Trade finance itself as a concept has been around as long as trade itself and has stood the test of time, and we expect it to continue to do so. The thing is, economic activity will take a bit longer to recover over the supply chain, especially on the retail side. It will take some time for people to start moving out, going to shops, and resume normal activity. So there will be a ramp-up period, which will take time. Now, especially on the importer side. So what this will mean is that importers will increasingly start to look for credit terms, where before they may have worked on an advance payment basis or paid earlier, they will want a breathing space where they'll want a payment holiday and pay after some time. We think this will be the case with large companies and SMEs, but it will particularly impact the SME importers, who will not have the cash reserves or the bargaining power that large blue chip importers have. So they will struggle more. In some cases, there will be a case where exporters will have to provide the credit terms or risk losing the customer. Now, this will be tricky for the Indian exporters as well, who themselves are cash strapped and will be looking to kickstart operations, buy raw material, get the staff to come back, etc. There will also be a risk to the exporter, as they will be unsure of the end customer's ability to pay their credit score, etc., and how that would have been impacted by this pandemic. So they will require a trade finance partner to help them navigate through these complexities. Now, there are a bunch of trade financing solutions out there, but COVID has demonstrated that factoring remains one of the better trade financing options as compared to, say, bank guarantees or letters of credit. A lot of banks who have issued guarantees, they have not honored the payments. The guarantees that have expired while the banks were closed, a lot of exporters have suffered because of that. Now, as discussed before, factoring is relatively new to India. A lot of exporters who have historically relied on secured bank finance, they will be at risk. So they will tend to move more towards these sort of unsecured factoring facilities as they look to liquidate their receivables and de-risk their balance sheet. What the post-COVID supply chain will look like, it's still unknown. So no one can predict the final shape that it will take. We think banks will be a bit slower to respond to these changes, and they'll take a risk-averse approach. It will be non-bank factors who will be able to come up with products and assess and underwrite these new supply chains. For example, a lot of the trade from China, a lot of the supplier base will switch from China to India. So it will be newer factoring companies and kind of the non-bank factoring companies that can underwrite and finance these new trade routes and inject cash. So to summarize, factoring post-COVID will offer a lot of benefit to exporters, including liquidity and working capital without having to post collateral, credit protection and removing the risk from your balance sheet, retaining customers, and potentially being able to obtain new customers and service them.
Indeed, very interesting. And I think you've very well summarized, Vidur. It is the need of the hour today when more and more business hopefully will pour into India, and where people will require actively a lot of working capital. Factoring, if can come forward, if there is a mutual agreement between the factoring companies and the exporters, I feel it's really a win-win situation.
Yeah,
now, I would definitely invite Mr. Prahladka to offer his views from the exporter community side as to what are the issues that they face while utilizing factoring services, and what is it exactly that the export community is looking for when they're asking for factoring services. So what is the requirement of the export community? Sir, if you could just help us with a little bit of a perspective from your end, from the export community.
Well, Anchal, I think most of our speakers have spoken on many of the questions which are very relevant.
Yes.
Now, I have one question for Mr. Ankur Khetan. Do you have a minimum turnover limit for the exporters to consider his request? The next thing is, do you also insist that the exporter should be in the business for minimum 3 years? Those are some of the questions. Second thing is, Drip Capital has been insisting on a tri-party agreement with the buyers. And for that, many buyers have had reservations because they say, while doing business with you, why this third person has come? If I pay him, whether the money you will get it or not, or these questions keep on coming up. So that is one point. The next point is, there are many buyers who are approved by ECGC. And our exporter members have been doing business with these buyers for maybe last 10 years, 15 years. And the businesses are substantial and they get regularly paid. But when they are seeking approval from you, many a times it is not possible. So that is also one of the challenge for many of the exporters. The next thing is, you all have not mentioned that you also do a lot of research on the applicant, which also takes about 7 days time for the exporters. So that is the point I would request you all to clarify regarding judging the creditworthiness of the buyer. I think Dhruveen has mentioned very, very well. But my another question to you is, let's say in our trade, we have 3 categories of buyers. One is a large company, one is a medium company, one is a small company. Now our buying agents community are trying to do business with all three categories of the business people. Supposing we give you a list of these companies and all of you do your own exercise and approve these names, then the exercise will be much easier for the exporters and the buying agents to build up business with these companies. The next question was, well, I think Puneet ji has come up with a lot of new solutions that the insurance they are able to do for up to 95% or to 100%. And they are not doing this third party agreement. So sir, you are welcome. And so these questions, actually, if these people can answer, it will help all of us.
Great. Thank you, sir. Thank you. I think what Prahladka ji has done is put the point of view across in terms of questions rather than just requirements. So, Ankur, the first question was aimed at you. If you would like to come forward and possibly answer those questions.
Sure. So I think one thing, the first question and the second question, basically the eligibility criteria. So the first question asked was, is there a minimum turnover which Drip insists? And is there a 3-year criteria on exports, right? So we do have a minimum turnover. That turnover is around 2 crores a year, right? Now the reason for having this turnover is just to support exporters who are in the business of exporting. If I'm looking at a 2 crore turnover, I'm looking at a profit margin of around 10 to 15%, right, on any trade. So we are talking about someone who is earning 25 to 30 lakh in terms of take-home income, which is a minimum income we think is required if you are in serious business. Anybody doing less than that is probably just exploring the option or is still sort of doing it as a secondary business, right? So that is the criteria we have set for minimum limit, just to assess the seriousness of the business. On the 3-year criteria, so I think it really depends on the company. We have a 2-year criteria for financials, right, which we sort of look at, and this is basically to assess all your payment history and all your books have been in line, what is your leverage ratio, etc. So typically we would use this information to determine what is the sort of credit limit we set for our exporters, right? Someone who is super leveraged might not be applicable for a higher limit compared to someone who is running their business more efficiently. So banks also look at debt to equity ratios, right? And this is what we are trying to assess here. Achal, then the other question was...
I'm sorry, Ankur, somebody switched on their mic in between. Yeah, please go ahead.
Question that Drip Capital insists tri-party agreement with buyers, right? So typically, as I mentioned in the slides, right, there is only one difference which is there in terms of how a ODCC product works operationally apart from collateral and how a factoring product works, right? So all the factoring companies typically would want the payment to come into their accounts, right? This is a standard practice which has been more or less happening. So there are two models. Either you open a Nostro account where the power of attorney is to the factoring company, or you inform the buyer that payment has to come to this account, right? So more or like an agreement, it's an information, and this is a standard practice again across the world. And when you're dealing with buyers in, let's say, US and Europe, right, they will not have any issues with this because this is something which has been going on there and is like a playbook for any factor to do. And it's not a legal agreement, it's more a information that you have to pay all the invoices which have this account number to this factor, right? And I think the other play, right, where you can probably open a Nostro account and route all your payments to that account where the power of attorney is with the factor. There again, there are challenges in operations, right? Like opening an account in a bank of your choice, getting the correct rates. There is also a lot of time spent just in, understanding the operational nuances, right? So that is why this is a more automatic route taken by the players. And I would be happy if others want to pitch in, like other providers want to pitch in on this question, right? Now, the other question was that DRIP doesn't approve a lot of buyers which are approved by ECGC. Okay, so ECGC is a typical arrangement by the government to enhance exports in certain regions, right? So how ECGC functions is that they also work with same insurance agencies which most of these factoring companies work with, but they also disburse some limits basis like very, very small limits on some of the buyers, like African buyers, let's say, right? Or Sri Lankan buyers or Malaysian buyers, which the government has decided that I want to promote exports in these geographies and I'll give limits on these buyers, right? And typically they will not underwrite those buyers. They would have set a certain amount that I am happy to give a $50,000 limit or a $100,000 limit on these buyers. Typically, private players don't have access to such government funding or to players who are ready to take risk in that market. However, the market is evolving, and I think Anchal asked this question to one of the participants that what are the challenges which are there in this market? Why is factoring not picked up? So India export, right? 50% of that is done in Asia, and another like 10% is done to Africa. This 60% market is still not mature from an insurance standpoint. And that's why this is the challenge which all factoring companies are more or less facing, and we are trying to solve this challenge. I'm sure within a year or two, we'll have a lot of more solutions. But that is why a lot of your buyers get approved, and only typically today factoring is supported on US and European trade routes, right? Like 90% of factoring. Okay. Now, what research we do in terms of the applicant, it's very, very simple. I answered this question on the chat also. Typically 2 parameters. One is your export performance, to just figure out if you are serious in export business. And typically we look at whether your volumes have been steady, right? Like in some cases we see that, someone did 10 million worth of shipments in 1 year and then 2 million in other years. When we talk to such players, they say, hey, I am mostly a domestic player, but I saw an opportunity because there was a price increase in export market, and that's why I did so many exports. Okay. Or so we try to stay in business where people have good relationships with their buyers. So people who have been, who are doing export as a primary business, or at least a major part of their business, right? So that's why we look at export history. And the second thing which we look at is credit performance. So typically, most of these companies will look at your performance on your past and current business loans. We are all aware that CIBIL data or the data available with, like this is another challenge which factors are facing in Indian market, is that the financial data availability is not great. Like most of the balance sheets are not standardized as per, global practices. Most of the data reported by CIBIL is outdated, right? Because someone in the banking desk has not probably informed you. Then there were a lot of changes with this nudge getting implemented in the banking system, where a lot of EMIs were showing overdue where they were not overdue. So, but the idea is like, we are just trying to assess if the payments have been fine. And sometimes what happens, it takes 5 to 7 days to do this analysis, because the CIBIL report or let's say the MCA report is saying a very different story than what we are hearing from the exporters. And we typically ask for clarification documents because we understand that the data reported by these agencies is not accurate. Okay, I think I've clarified most of the questions, and I would be happy to. Mr. OP, you are on mute.
Thank you, Ankur. Very well answered. We are frankly at the end of our session, but Prahladka sir, agar koi aur unanswered question hai, to please bataiye. Ankit, can you unmute Prahladka ji, please? Thank you.
We have three category of buyers. सुन रहा है क्या?
हाँ जी.
Last question was, we have 3 category of buyers: large buyers, medium buyers, small buyers. And now many of our buying agents see potential in these small buyers, which they can really help them and can grow business in exports from India. So what, from your experience, what is your judgment or what is your suggestion in this matter? If we give you a list of, let's say, 100 buyers, and you all go through these data and you approve these buyers, then the buying agents can promote these buyers to our exporting community.
Understood.
Correct. Yes, sir.
Okay, so
Okay, Ankur, you want to take it forward? Yeah, take it forward. It's fine.
Dhruvin, you can
Yeah.
give your inputs and then I can.
Yeah. So basically, sir, what happens is that there are a lot of companies dealing with many buyers, and three categories of buyers I understand. They might be large, medium, or small size buyers, all of the three. Typically in India, sir, I would like to tell you that all the factoring companies which are there, or the foreign factors which are there, they work on the approval process of the insurance company. Now, once they get limits on the insurance side of it, there is a cost involved. Whenever I apply a buyer to a particular insurance company, the insurance company charges me a buyer processing cost. Now, that buyer processing cost is bared by the factor and not by the exporter till that point of time, right? So, if any factoring company goes through that 100 list of buyers and apply insurance on that 100, for a particular period, then I guess if the factor is ready to bear the cost, they can do that. If some factor which is not ready to bear the cost, they will not apply insurance on the 100 buyers which are there. Other practices which also the factors go through is that doing a thorough ledger analysis, which is also can be important for telling that whether this buyer is approved or no. But a lot of companies actually don't rely only on that, because whenever there is a recourse back to the exporter, or there is a buyer bankruptcy or a protracted default, they want the payment to be made by the insurer itself, because implementing a recourse is also a difficult task in terms of buyer bankruptcy or protected default.
Thank you.
If you would like to add anything, then you can add.
Dhruvin, I think we would like to go forward with a few more questions, because a lot of our members, sir, aapke I believe sare questions answered ho gaye hain.
Yes.
And we'd like to
I must compliment all of them. They are doing an excellent work.
I know. Thank you, sir. Thank you. They've really helped us with a lot of valuable information today.
Anchal, maybe I would like to add something.
Hanji, Puneet, bataiye.
Like Ms. Prahladka said, so there are different models where factors work upon. So like Dhruvin also mentioned that we work on two-factor model, where we have to tie up with 400 import factors. So once the limits are sanctioned, the exporter or the seller just has to inform over an email. There has to be no tri-party agreement, only information over an email, marking a copy to us that they have entered into a factoring agreement with India Factoring, and going forward, all proceeds will go to India Factoring. That's only the requirement. There is no agreement. And though the majority of export is happening to US and Europe, but we do cover Asian countries and Australia, New Zealand, Dubai also. So there are no challenges. And the insurance part, what we do is we cover the 100% of the invoice, and we fund as high as 95%. So that is what I wanted to add.
Thank you. Thank you, Puneet. I would hand over the session to Manoj now, my colleague here from BAA, who has actually been the brain behind this entire event. Manoj, if you could take up the question and answer rounds for our members and put up the questions that we've already received from other members prior to the session.
Yes. Good afternoon, everyone. First of all, big thank you to all the speakers in sharing all this valuable information with us. The first question that I would like to ask is myself, what is the costs of factoring? Lots of members have asked that factoring costs are varying. So how can maybe Puneet can answer this question. What is the lowest or highest cost of factoring that exporter should look at?
Sure. So I'll tell you what the cost is. So cost is there into three aspects. One is the rate of interest, like a bank charges. So factoring rate of interest is obviously higher than a bank because the product is designed in a manner. It is a non-recourse product. It is a without collateral product. And other cost is the credit cost, credit covering cost. So that depends upon your buyer and the country risk. So if you want a ballpark figure from me of an annualized basis, I would say the ballpark figure should be close to 6-7% annualized.
All right. That answers the question pretty well, I guess. And so if we talk about per invoice for 4-month period, for example? What would be the cost? Because some people understand in that aspect only.
Correct.
Okay, I'll break up the cost. See, one is rate of interest that is linked to LIBOR. So currently USD LIBOR, Euro LIBOR, both are 0 or negative. So we charge, say the charge is around 4% on LIBOR.
Yeah.
After that, say for example, the credit cost of your invoice is say 30 bips. So if it is a 90-day cycle, like you said, so there are 4 cycles. So the 4 cycle, if it is 30 bips, so it is 1.20. So 1.20 plus a 4%. So the cost is around 5.20, plus there is a facility fees which is charged, that is annually. It can be as high as 1%. So the cost is around 6.20.
All right. So I mean, for a very normal person who doesn't have like understanding of the nitty-gritty of these numbers, I would say the cost is maximum 1% per month. Maximum.
No, that is on a very higher side. So I'll give you an example like India Factoring. So I'll give you an example. We don't charge per invoice wise. In case of India Factoring, we charge on an account level. So whatever your utilization is in terms of various currencies, we levy you a interest at the month end only. So if the payment is received earlier than the payment day, so you tend to save on the interest. The interest is charged like in any other facility like a CP account.
All right. Thank you. I think that will answer a lot of questions that a lot of people have about the cost of factoring. Then we also have some of our colleagues who had a lot of questions with all the panelists. May I ask Sumit Chabra to ask his question? Sumit, are you there?
Are you around?
Okay.
Manoj, I believe you can go ahead and ask his question itself because we do have.
Maybe we have Vishal Dhingra. All right, I can ask. So what I would want to know, can all the factoring companies join hands with BAA and pre-approve a set of buyers so that it's easy for anybody to take factoring on those buyers in US and European countries and Australia, almost all the safe countries, I would say. That saves a lot of hassles to all the factoring companies put together and all the exporter community at large. And BAA can facilitate that really well, easily.
Good question.
I can tell you one thing, like the factors which are available, like we have a 2-factor model. So the factors in US and Europe, they are very, very active. So we tend to hear from them on limits availability, maybe in 2-3 working days. But if you talk about African countries, maybe Japan, Australia, New Zealand, China, Vietnam, they may take time. They may take maybe a week to 2 weeks. So yeah, we can give you a foresight on strong buyers wherever the limits are available.
Okay.
Mr. Manoj, that's a very good idea. Like if you can share the list of buyers with all the panelists, they will, all of us will be able to get back to you, and this, like you can facilitate with the operational processes, and we can definitely, like I think everyone has the capability to do that. So it's
I'm sure you must be having a factors association put together. You all can decide in a pre-approve a list of customers, and that will make everybody's life so easy.
Definitely.
Yeah, I think just from a Seawise perspective as well, we'd be happy to work on that basis and pre-approve some buyers.
Great.
Right.
In
So
fact,
we'll
that also answers one of the questions Prahladka ji had for a long time, कि अगर pre-approved buyers हो जाएंगे, सबकी life बड़ी आसान हो जाएगी.
Yeah.
We all want you to become member of our trade, and you all have good knowledge and good commitment. Thank you all, sir.
Thank you.
Mr. Vishal Dhingra is there or no?
Vishal Narayan is there. Manoj, I can see Vishal's hand raised.
Any one of the Vishal?
Yeah, Vishal is there.
Yeah,
Vishal,
I'm here. So I'll take over for Mr. Vishal Dhingra also.
Yeah.
So I just have a basic question, just for the benefit of a lot of members who are here on the webinar today. Can somebody just take us through the difference between bill discounting and factoring? So just take us through that process so people are a bit more aware of how this works. Thank you.
You want me to take that, Anchal?
please go ahead. Please go ahead.
See, bill discounting is one of the traditional modes of financing. That will always be part of your maybe total working capital limits, which a bank or an NBFC would settle. At the end, that would reflect as a debt on your balance sheet. In factoring, you are selling your receivables to a factoring company. Where once you do that, once you assign that document or invoice to a factoring company, the owner of that document becomes the factoring company. All the rights pertaining to that documents are with the factoring company. So you are no longer responsible. The collection is responsibility of factoring company. The factoring company has paid you upfront amount that can be 80, 90 or 95%. So that becomes a off balance sheet transaction for you. So your outstanding gets converted into cash. So there are total different things.
Okay, and also the BRC will be issued by the factoring companies.
In terms of India factoring, yeah, BRCs are being issued by us because we are an authorized dealer with RBI. We do that.
And just in terms of other factoring companies, your bank will continue to issue the BRCs, and typically there's no delays. It would be as per a normal.
So just one technical question. I hope this doesn't sound stupid, but it's just a technical question, because normally the money from an overseas importer should come in convertible foreign exchange to your account, to the exporter's account. But now it's going to come through the factoring account. So does that make any difference? I mean, because the exporter is getting paid by you in INR, basically.
No. So in our perspective, we would pay them in the invoice currency. So if you have a dollar invoice, your buyer would pay us in dollars, and we would remit the money to you in dollars as well in the same account. So there would be no issue from that side.
Okay, so the initial 90% or 70% or 50% that you would be giving would be in the currency of the invoice.
Yes. Yes.
Okay, thank you.
So Vishalji, I have a point to mention here. Basically, it becomes a third-party payment in other companies' case. So I would like some of you to explain what are the challenges your clients are facing when they don't mention the name of your company in the shipping bill for the issuance of EBRC.
Mr. Prahladka, there is no need of mentioning our name in any of the shipping documents. Once we factor the documents, there is the AD to AD transfer. We'll transfer funds to your main working capital bank account. So in our case, the transaction remains same. Like I mentioned previously, the way you are working currently with the bank, the working remains exactly same. There are no changes.
हाँ पुनीत जी आपका केस ठीक है लेकिन और कंपनियों का बस में फिट नहीं होता है.
I'll try answer this question, Mr. OP. So basically, अगर आपका AD account is the factor, then there is no problem. Let's say if the AD account is not a factor, again there is no requirement for the factor's name or account details to be mentioned on shipping bill. However, the banks can sometimes insist that. So it's better. So आपका जो payment आता है, let's say if you're factoring through Drip Captal, right? So Drip Captal will typically write that this is the payment for this invoice number and shipping bill number in the Swift message. So typically that information is enough for the bankers to process. And Drip Captal is a registered factoring agent, right? However, if your shipping bill already mentions these details, it becomes much, much easier for your bankers to reconcile, right? So there is still a lot of education gap between like what RBI suggests and what we see in practice by banks. But yeah, like it is a good practice to mention all the details in, let's say, shipping bill. And even
so just one more query. I'm sorry, I'm taking too much time, but just one more query. So most exporters are working against a packing credit facility from their banks, and can they also avail the factoring in conjunction with their bank, because then the bank gets paid and the packing credit gets adjusted and they can use that again? Or is factoring only valid when a person is not using any packing credit and is using only his own resources?
No, you can keep on doing that. The question is, whichever data you give it to the factoring company, you have to give that data in totality. However, you can continue with your banking lines also.
All right. Can we now have Nitin Mohan? His hand is raised to ask a question.
Yeah, is there a minimum commitment an exporter or factory has to give to you on the amount of transactions they do monthly or yearly?
Dhruvi, would you like to answer this?
Yeah, so so there is no particular commitment. I mean, to each his own. Every factoring company has their own policies. Some factoring company might take a volume, commitment, and some might not. So for us, at least, there is no volume commitment as such. We would like to, take insurance on the buyer and then, particularly execute the transaction. So there's no volume commitment which we require.
So if I have one customer who's I'm doing only $50,000 and $10,000 worth of business every month, I avail facility, you'll give it.
Yeah, you can avail the facility for even if for a $10,000 invoice or a $50,000 invoice every month, which is actually a decent amount. So, I mean, I don't think the factoring companies would reject that scenario.
Okay, thank you.
Yeah.
All right. Mr. Vishwas Singh Rawat, you also had a question. Are you there?
Yeah, Nitinji, thanks. Just a small question that one of our panelists here have started to factoring to the buyers. Just like at this time we are working that we are talking about that the factoring is for the exporters. But one of the company has factored some Dubai buyer, and after that they have stopped it. So now I want to ask that is the factoring to the buyer is still in the trend, or it can be offered to buyer or not?
I guess Ankur would like to.
Sure. So I think like obviously there are different companies who factor buyers. So I don't know if you understood your question, but there are two things. One is we have approved the exporter, but are we going to finance one particular buyer? Right, or change in the approval status of that particular buyer. And the second question is that the factoring is being availed by the buyer, right? So the second model also exists in mature markets like US, Europe, right? In India, there are not many players who are doing this, right? Where the factoring is arranged by your buyer. And please correct me, other panelists, if I'm wrong. If your question was the other part that you were getting factoring for a buyer by a provider in India, but that suddenly stopped, that can happen because your buyer credit rating would have been affected. So typically we continuously monitor your buyers, right? And we see if their performance is up to par and their credit worthiness is up to par. Whenever there is a decline in credit worthiness, typically factoring companies will stop supporting that buyer.
All right. I have one more question to all the panelists, especially post-COVID. What kind of relaxation in regulations can be provided to the exporting community here? Because at times I've seen that the customers are approved, but due to one factor or other, they don't get the facility. Mr. Vidur Jain, would you like to answer this?
So I think given the risk and the environment, it's very hard to say that there'll be a relaxation of any policies or procedures. There'll definitely be a change, right? So if there is a new customer coming on, where in the past we've had to look at a trading relationship or an X amount of experience, we may look at relaxing some of that to try and facilitate these new trades. But we'll try and help exporters as much as we can and alter our policies, but it's hard to say that there'll be.
Mr. Brijesh Agarwal has his hands raised. Mr. Brijesh Agarwal, would you like to ask your question? Are you there?
Yeah, I'm here. Am I audible?
Yes.
Okay. What is the interest rate difference between bill discounting and factoring? If we say which one is more competitive?
So I guess bill discounting is a facility which Puneet actually mentioned that is more provided by the banks. In fact, so the both facilities are totally different. You can't compare them because the implications of both the facilities are different. So obviously the factoring would have a higher interest cost than bill discounting because bill discounting is somewhere protected by the collateral which the bank takes from you, right? This is a completely non-collateral, and the factoring, what it does is buys the entire receivables. So it becomes a complete kind of a non-recourse structure. In bill discounting, the recourse is always on the exporter. There is no much assessment on the buyer as such.
Correct.
So the facilities are completely different, and the cost would obviously be high for factoring rather than for bill discounting.
Okay. Thank you.
Yeah. So I would like to add, Prasanna here, I would like to add to, what Dhruvansh had mentioned is that I had written a paper on cost of factoring, not restricting this to a domestic or international, is that factoring cost is always, discounting cost, whether it is factoring or bill discounting, is always should be looked at a time value for money. When you say time value and money, you know that when you go to a bank will give you a secured exposure. So a security always comes with a cost. Have you factored that cost, which is never gets noticed, even though the probability of getting the loan in the bank also is so remote. 1, 2, and again the kind of immediateness or quickness which the factoring companies work on. So you actually get the money when you need it and not when you don't want it. So this is something which I would say that everyone in this forum should look at, because this is one typical question which I come across even in domestic invoice discounting, that why the cost is so high. But then I think one should also appreciate that today you decide you need money. If you are going to get it in 3 days, then that's the time value for money. And you should factor some cost for the time before early you are getting the money.
Well, thank you, Prasanna. One more question that I have from all the panelists before we end is post-COVID, the limit, for example, like Drip has a limit of 2 crore for financing any exporter. Do you guys think that if we all start
Manoj, we've lost you.
Also, can we look at am I audible now?
Yes, please.
So I'm saying that post-COVID, a lot of exporters will lose their turnovers. So the limit to finance exporters, like Drip has a 2 crore limit. I think that should go down in case of smaller people, because they were the ones who really need the help actually. Not the larger ones who can avail packing credit facilities, but they are the ones who need really help. And if BAA or the exporter associations come together and start approving them, will the factoring companies be able to take that risk and give them finances also?
So Manoj, what I would say is it's not a strict no from a factoring company side. It would depend upon how strong your relationship is between buyer and seller, what is the vintage. So there are other factors which can be considered. So it's not a strict no from our side.
All right. Why? Because see, for example, we as agents understand our buyers' financials pretty well. And in the end, the factoring company gets the money from the customer. So all they need to worry about is the balance 20%. And if we can approve, yes, a buyer is sound and safe and you get the insurance on that, then you can even fund the smaller exporters, I believe.
Yeah, can be considered on merits. Yeah.
All right. Mr. Vishal Dhingra, are you there? Would you like to ask a question?
अंचल इन्होंने डोमेस्टिक सप्लाई चेन के बारे में नहीं बोला है.
Sir, we did talk about the domestic, not in too much depth, but who had Kredex?
Prasanna
had spoken about.
I'm happy to address any questions on domestic supply chain.
Sir, is there any
explain नहीं किया ना, product explain नहीं किया ना, तो कैसे पूछेंगे?
Do we have time now?
Unfortunately, we are already short half an hour over our time.
Sir, we can connect you with the Prasanna separately, yes, and you can take it up with him separately.
Okay.
I mean, that is something that we would like to do in the end with all the community at large.
Correct. In fact, what we are going to do, there have been a lot of questions that have come up on the chat panels. We are going to compile these questions and float them to all the 5 panelists from today, and we'll get back to you with their answers on this so that everybody has answers to their questions.
Anchal also, India Factoring also does domestic factoring.
Sure. Thank you. Thank you, Puneet.
So I think we should conclude the session. I would like to thank all the panelists to spend their valuable time and valuable information with us. It was pretty helpful, and I think all the participants were able to take information with them and utilize it down the line. We will be sharing your details with a lot of community. And as a BAA, we would like to continue to forge relationship with all the factoring companies in disseminating your information to exports baskets in smaller cities like Saharanpur, where people actually use or can utilize your services pretty well.
Yeah, it was a pleasure, Manoj.
Yeah.
Thank you all. We will be back with more sessions next Friday. We'll keep you all posted. The next session is going to be on 3D designing and technology in our businesses. We'll keep you posted in the next few days on the details of the webinar. But thank you all for participating so proactively today and being such a great audience.
Thank you. Thank you for organizing.
Thank you.
Thank you.
Thank you all the panelists for taking out the time.
Yeah, bye.
Thank you, everyone.
Bye.
Thanks. Bye.
Bye.
Disconnect. हो गया